Good morning, everyone, and happy Friday. It's not too happy with DraftKings down the way it is. It is looking pretty brutal this morning. We're going to cover everything with their earnings report very shortly. But so far, DraftKings looks pretty bad this morning, as all other companies have been with their earnings reports. Tom, I wish that DraftKings could have just reported earnings maybe a couple weeks ago, or maybe even a couple weeks later, because I feel like it was the worst time. We even had Nvidia, who demolished their earnings, even fall off 7%. So whatever, the timing's rough, but we're definitely going to cover their earnings report. Tom, looking across the market overall, we're even seeing the SPY a little bit weak. That's pretty close to its lows, and even the powerhouses like Apple are even falling off just a little bit.
Yeah, they are. It's actually pretty insane to see these big tech stocks kind of gapping down this morning. It looks like Apple, now that the market opened, is trying to come back, which is good at least. But yeah, as of right now, my watch list is probably 50-50 with all these stocks right now. And one that's in the green a little bit is Netflix, and they're actually kind of bouncing back up. I know this was one of those beaten down stocks from their earnings, so hopefully they can get a nice bounce back to the upside. But yeah, going back to DraftKings here, Mike, it's insane to see how it dropped down this much. It's down 13%. But one thing I'm still happy about is that we held that $17.50 support. If we look at the daily chart here, we're just hovering right around that low down here. So hopefully this holds up, but with the bad movement, it might not. We saw stocks like Palantir continue down after their earnings came out yesterday.
Cool. So I just want to wait one more minute. We have a bunch of people joining up, and I know that they're all watching these DraftKings earnings. So we're going to cover the DraftKings earnings. Give us 1 minute. We want everyone to join up. But Tom, just doing a quick look around across the market. Like you said, your watch list was about 50-50. What areas of the market are you seeing rise today? Because for me, I'm seeing Netflix in the green by 2%, and some of these stocks that are already down tremendously, Netflix, I guess you can say Zoom a little bit, and a couple other ones are looking okay today.
Yeah, they are. It kind of looks like Zoom is trying to form a bit of an intraday support down here, around 128.77. And yeah, I'm seeing lots of stocks like this trying to climb back up. I know Palantir is in the green after their bad earnings yesterday. I know they're only up, 1 or 2%, but still though. And then we also have AMD trying to climb back, actually. I know they were looking terrible yesterday, selling off in a major way. And it looks like at market open here, they have a pretty nice green candle coming in. It looks like Nvidia is now climbing to the top of my watch list as well. It looks like they're trying to come back up after those bad earnings, or I should say after the bad movement with earnings. It's not like the earnings were terrible or anything. They just didn't wow investors. But yeah, I really hope to see some of these beaten down companies come back, Mike. And it looks like Nvidia and AMD are trying to do that today. And then we even have stocks like Rivian kind of leading my watch list here, up 1.6%. But I will say there's no crazy movement to the upside today. My leader is Netflix up there, right around 2.5%.
All right, so we got most people on the stream now, so we're going to shift back to good old DraftKings. Looking at DraftKings stock, obviously it's brutal. It's down 12.5%. It is coming back up right now, which is good. I'm not going to complain about that. But, Tom, let's shift over into the dashboard because I want to showcase how the revenue has changed quarter by quarter and year by year. So if we start off with the quarterly revenue, we can see in the previous quarter, there was a revenue of around $213 million. In the most recent quarter, they grew at an insane pace, and they had their quarterly revenue at $473 million. So quarter over quarter, their revenue exploded up. To be fair, New York just launched, so that was always good. And also we had a lot of big events, especially with the NFL and college football. But either way, their revenue is exploding up. Tom, it's not like even if we compare this quarter from this year to the same quarter from last year, the revenue is still up an insane amount. The revenue was $322 million in the same quarter last year. This year was $473 million. So the revenue is growing at an insane pace. So then if we go up a little bit and we look at the annual data, we could see total yearly revenue for 2019, $323 million. 2020, $615 million. 2021, basically $1.3 billion. They are basically doubling every single year for the past 3 years. And then on top of that, their guidance for next year's annual revenue, let me pull it up to be exact, is in the range of $1.85 billion to $2 billion. It's all the way at the top, Tom. Yeah, it says DraftKings reports fourth quarter earnings, blah, 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 $1.85 billion to $2 billion. So it's like they're growing at an insane pace. You know what I mean? They're growing at an insane pace. They're giving good guidance, but the market just doesn't care. Kind of like what we saw with, Nvidia. Like, they reported great earnings. The market said doesn't matter. Now, with DraftKings, I can understand that they're still not a profitable company, and I can understand why some of the safer investors are shifting out of it. But it's like, you know what I mean? Like, they're growing at an insane pace.
Yeah, like whenever you see these types of numbers, guys, it's usually pretty good. Like, I will say, these numbers with DraftKings are pretty telling. I know that they aren't looking the best with some of these, like the PE ratio, and their net profit margin is obviously not the best right now. But looking at it overall, I really like a lot of these numbers that we saw, especially that quarterly growth right there. You can see that DraftKings was kind of dipping off this year. That's why their stock has been going down. Their revenue and stuff was decreasing. As we can see back in September, it had a pretty big jump to the downside, but it's so nice to see them jump all the way up to $473 million right there on their revenue. I think that's a good and telling sign, Mike. And another thing that really caught my eye was their total debt. It's pretty crazy to see how their total debt really fell here. You can see the green bar was at like 1,322, and we dropped all the way down to 153 million now. So that's pretty insane to see that big of a drop with their debt. I don't know if they paid something off or something, but either way, it's really good to see that type of to see that debt drop like that, because a lot of people were saying DraftKings was a company that had too much debt and obviously just too much cost in general. So it's good to see that fall as well.
All right, Tom, let's go over to the presentation because I want to showcase a couple things on that too. So if we go down to slide number 3, we can see the first row says $473 million of revenue in Q4 driven by strong customer acquisition, increased customer engagement, and a healthy customer retention. Year over year, the revenue growth in the fourth quarter was 47%. That's giant. And back to what we were talking about, revenue. $473 million in revenue for this most recent quarter. They were only expected to have a revenue of $445 million. So they beat expectations on that. They missed on their EPS, which, appears to be why people are selling out of it. But, we've seen crazier things in the market, especially with like Nvidia's earnings. But then also, Tom, if we scroll down to, I want to say page 11, page 10. Page 10 on the presentation. We can see their monthly unique players and then average revenue per monthly unique player. So we can see in 2020, their average revenue per monthly unique player was $51. In 2021, that boosted up to $67. It's a pretty nice jump, and that's big. You could just see their monthly unique players overall boosted up from 883,000 in 2020 to basically 1.5 million in 2021. So it's like the growth is there, and part of what angers me, Tom, a little bit is like, of course, like I can understand why growth companies have been getting smacked over the past couple months. The fear of rising rates and rates actually rising, it hurts the current valuation of growth companies. And I understand that, and that's why all of these stocks have been falling for months now. But what is definitely a little irritating is the fact when, like, for example, if you're investing into a company like Coca-Cola, you are not investing into them for growth. You're investing into them for safety. If you're investing into a company like DraftKings or AI, or you can say Zoom, Corsair, any type of growth stock, you invest into them because you think they're going to grow. They're clearly not in the best financial position as it is because they're in a growth phase, For example, no one's really investing in the Tesla, 5 years ago because they're a value stock that has very predictable revenue and cash flows. No, they invest into them because the potential for growth in the future. So it's definitely irritating when you see growth companies grow a ton and the market's like, we don't care. It's just...
Yeah, that really is irritating. It's bad to see, and we've been seeing it all across the board. It's just like, man, at some point we just have to see a turnaround out of, I just think, not just also the growth and the movement, but just investor sentiment. I feel like you said, the timing of this was just bad. We have all these other stocks down on earnings as well, kind of putting it in people's heads. Whenever people see that EPS miss, of course, they kind of go crazy. And we saw that happen earlier this morning. And I will say their growth has been pretty good, Mike. I realized that they were falling down earlier in the year, but this report was pretty good in my eyes. And like we said, the EPS missed. But when you look at the revenue and you look at the growth and even the monthly users and stuff like that, it was just really good to see the type of growth they had. And kind of going back to that chart, Mike, these numbers are pretty telling here. And even going back up to the top, you look at all this stuff, they launched in New York and Louisiana. They launched the DKNG branded OSB in Oregon. So they've been just expanding and expanding more. So I don't know. It's crazy to see them down. And then another crazy thing is, Mike, is, we saw DoorDash. We saw them kind of fly up, and they actually missed on their EPS in a big way, and they missed on their revenue. They just flew up because of the guidance. But, it's just crazy to see that some of these stocks that reported bad growth flew up just because they have a good outlook. But then DraftKings obviously tanks down with good numbers. It's man, the market's crazy with these earnings. And this is why I don't even play earnings. And, honestly, I'm just going to keep holding my DraftKings shares, and I think they'll be solid for the long term. I'm sure a lot of people are like, hey, are you selling out right now, or what are you doing? So I'm still holding mine. I think it'll be fine over the next 3 to 5 years. Even over the next couple of years, I think it'll end up recovering in a pretty good way, especially as these states keep legalizing, just like New York did. And plus, I feel that over the next year, New York might bring them way more revenue than they had over the past year.
Oh, yeah, I'm definitely still holding. In my opinion, the sell-off is irrational, but the market is irrational sometimes. And, like you were talking about guidance, I want to pull up the exact number. Let me try and find it, because I know that okay, yeah, perfect. So DraftKings for 2022, it's all the way toward the bottom of this sheet, Tom. It's if you just search increasing midpoint of 2022 revenue, it's not all the way at the bottom, but it's right there, increasing midpoint of 20, yeah, perfect. So that first bullet point, it says DraftKings is raising its fiscal year 2022 revenue guidance from a range of $1.7 billion to 1.9 billion. So that was the range. It was 1.7 to 1.9 billion in revenue for the year. They say, hey, we actually think we're going to make a lot more than that. So we're going to change our revenue range of that range to 1.85 billion to 2 billion. So it's they're growing, and everyone expects that, and they said, actually, we're growing more than everyone expected and more than we expected, so we're going to raise our guidance even more. So it's their guidance was good. So it's just it's sometimes I'm I just shake my head reading some of these market reactions. I understand that, yes, they're spending a ton of money marketing and growing right now, but that's a part of the process, when Tesla was going crazy, especially in the beginning years. Actually, let's look at Tesla stock really quickly. If we look at Tesla stock from here, let me just go to let's say we did a 5-year chart, something like that, and we looked at Tesla, I don't know, maybe pre-2019, we can just see back and forth. I was not someone who was following Tesla every single day back in 2019, but we could see when Tesla was in its growth phase, the market just said, oh, we don't really care. We want to see consistent profits, right? And only until, I guess you can say, it really wasn't even until recently that Tesla had their first profitable year, but it's the market just, sometimes it's so irrational. Sometimes I just shake my head seeing things, but either way, I love the growth out of DraftKings, and another thing related to, I guess you can say, their expenses is, I know a lot of people, like even Jim Chanos with his short report, they were coming out saying, oh yeah, they just spend so much money on marketing and customer acquisition and this, and that. It's like, what do you think's going to happen when, like for example, like New York just launched. If they want to be a dominant sports book in New York, you have to advertise. Like, you're not just going to become a dominant sports book by sitting on the sidelines saying nothing or not doing any advertising. You have to advertise, get your brand out there so people know about you, So it's like right now they have to spend a lot of money to get to that dominant role that they want to be. So it's like, let's say in 2 or 3 years, they're not going to have to spend as much money as they are now. And at the same time, they're going to have a lot more customers. And then they're going to have a much more established brand. And we all know how lucrative the sports betting industry is. So it's like, short term it hurts, but I'm prepared for the volatility. And I'm very excited for, the next couple years because, the stock's been getting destroyed lately.
Yeah, me too. And I think that with seeing their revenue jump this much, like we saw over the past quarter, I feel like that maybe some of the cost for their advertisements might be starting to pay off. Like if we start to see the next couple of earnings reports come in with more growth, that's going to be amazing for them. I think it'll show that their revenue or their ads were paying off in New York and then also these other new states that have been coming into the fold. And it's just really good to see that revenue up like that, especially like you said, as they are kind of paying so much for marketing right now. It should be a good thing for them. And, obviously it should just bring in more customers, obviously. And New York's a big state. So I feel like that as the year goes on, I know that DraftKings isn't like the major player in New York yet. They're a major player, but they're not the leader. But looking at it, I feel like that as time goes on, I feel like that they will just continue to see good revenue from that, good revenue from other states. And it's just so telling to see that revenue jump that much from the last quarter to now. Like, that's pretty insane to see that we jumped that much. Like, I can't remember the exact number, Mike. It actually over doubled. So like, that's pretty insane. And I feel like that cost is starting to pay off. Kind of like what you mentioned, they pay a lot right now on ads and different stuff like that. And I really do believe that will end up paying off for them whenever these states legalize. I'll say whenever my state legalizes, I might even look at DraftKings a little bit.
Of course. And then just one more thing. I know we've been rambling about DraftKings for a little bit now, and I'm sure the audience wants to hear about some other stocks, but just one more point. So if we go back to the dashboard, Tom, and we look at the revenue quarter by quarter, when we're in even annualized revenue, it's not like the things we're saying is, oh, we hope DraftKings will rise in the future. It is like they are growing. It's like, it's not like, Tom, it's not like we're out here saying, oh, I hope DraftKings can increase their revenue at some point in the future. It's like they already are. Over the past quarter, they doubled their revenue. That's hard to do for a company as big as they are. And they're, I guess you can say, still a relatively small company because the stock got destroyed over the past couple of months. But still, to double your quarterly revenue, over double your quarterly revenue, and even if you go to the annual one, Tom, like last year, $615 million in revenue. This year, just under $1.3 billion. They are clearly growing, but the market's just like, don't care. But either way, I guess that's enough rambling for now. I think time will definitely, I think over time, DraftKings will definitely trade towards its fair value. And then once the market wakes up a little bit and realizes that, hey, maybe we overlooked DraftKings, then it'll pop up. But in the meantime, I'll be buying the dip.
Yeah, it probably will, and those are some straight facts right there, Mike. You're going off this morning with the DraftKings information, man. You are on fire.
Oh, gosh, I'm pissed off, Tom.
Yeah. Well, hey, we're bouncing at $18. Hopefully this holds up. Not looking too good though. But Mike, like as far as some more stocks today, we do have lots of stocks in the red. Unfortunately, I know DraftKings is down, but we had Roku fall with their earnings yesterday. I mean, man, poor Roku got really destroyed. I'm glad that DraftKings isn't down as much as Roku, although we're kind of getting there. But, lots of stocks are in the red today. We have DraftKings in the red. Roblox is down. We have everyone's favorite recently, Lucid, also kind of tapering back over after hitting that $30 resistance. A lot of the growth stocks are definitely down today. We even have Tesla falling down 1.2%. Look at Tesla break that low of yesterday. It's actually starting to look like a pretty good play to the downside. Even like some safer plays like Caterpillar are in the red today. So lots of selling pressure across the board today. And I wonder how the S&P 500 has been holding up while we've been talking about DraftKings. And hey, it looks like it's trying to hold this 436 support, but I will say it doesn't look promising.
Yeah, even the S&P's weak, just like you said. It's not really down too much right now compared to yesterday's close, but yesterday's close was pretty violent. That was a harsh sell-off, especially towards the end of the day. So it's definitely relatively weak. Like you said, Tom, like even some of the bigger, like more established companies are taking a hit today. Looking at some of the plays that are moving a lot right now, I mean, Intel's fallen off, JD. I don't know. It's definitely not looking too good. But on a positive note, Tom, it looks like Kraft is holding up decent.
Yeah, it is. KHC is doing pretty well. It actually is up 2.75%. And thank God, because whenever I see Intel and DraftKings down, it definitely scares me a little bit. But looking at Kraft, at least it is holding up. It's up to $38. We can look at them on like the daily chart. And boy, oh boy, ever since their earnings, they have been running up this week in a pretty major way. So hopefully it continues for Kraft. Obviously, I would enjoy to see it. They just broke that $38 resistance today, and maybe they'll finally start to run up towards 40 and maybe even break that. So looking pretty good here. I know they are another one of those safer, like longer term holding plays, kind of like Coca-Cola. They shouldn't do too bad, but they shouldn't do, they're not expected to like grow a ton or anything like that, like a Lucid or maybe like a DraftKings or anything like that. But definitely looking good, Mike. And another one kind of coming up today that's been beaten down is good old Peloton. It looks like they're up 2.6%, and they're actually having some pretty good momentum off that $30 support.
Yeah, good eye. And then, Tom, another one that's kind of in the green is Facebook out of all stocks. Facebook's been taking a major hit lately, but it's up like 1%.
Yeah, that's actually really good news. I know they were going down this week as we saw that terrible news come out where Google is going to be doing the same exact privacy change that that Apple did that actually hurt Facebook. So Facebook might take another hit on their on their fundamentals here. But looking at it, I mean, I hope their stock ends up bouncing as we approach that $200 support. Looks like we were bounced at 206.66 today. We don't like seeing all those sixes right there, but looking at the 1 year daily, Mike, I mean, man, they fell below 220. They're almost down to around $200. Like, man, this one's at such a good discount right now. Like, oh, for the future, I mean, it's hard not to pick this one up.
Yep. Alrighty, so let's get into these, or let's get into some of these comments. So we have Sal saying, "Good morning. Can you check the levels on Roku and Google?" So thanks for that comment, Sal. Tom, Roku's not looking, well, it is looking bad, but intraday, it's popping up a little bit.
Yeah, intraday today, it's coming back, but man, yesterday it got destroyed with those earnings. So, it's still down 20%, even though we've been coming back, and, we might be able to come back up and retest 120 or something like that, but who knows? This one's probably going to be all over the place today. But as far as big levels to look at, I mean, this one had such a big drop last night that I feel like a lot of these levels are going to be levels from a long time ago. Like if we go back on the Max Weekly, we have to go back almost over a year ago to even find some good support levels. So there's obviously a big support right at $100 even. The stock actually got pretty close to touching that this morning, Mike. We got down to 103.62. So I would say use 100 as a good support. And then above that, I would say 110 would also be a good intraday support. And then for good intraday resistance, like last night in after hours, we had some bounces up there around 130. And it just looks like that the stock just kept tumbling through all the next levels. So I would say like look at 130 and then 110 as a good support. But it's just hard to tell, Mike, because it took such a big tumble with earnings that it's probably going to go all over the place. And like I said, it's touching levels of like more than a year ago.
Yeah. And then what are you thinking with Google?
Google, yeah, they've actually been kind of all over the place with their earnings as well. We can see on the 1 year daily, they flew up, they touched that $3,000 resistance, and they came right back down. With Google, I have a pretty big support down here, right around $2,600. As far as intraday movement goes, there was a low yesterday around 26.40 in pre-market. So It looks like we did bounce right around there today also. So use like 2640 as a good support. And then for resistance, we're actually approaching one right around 2680. That's been a good intraday level.
Alrighty. And then we have Cornish saying Apple taking a dive. Let's take a look. Yeah, I mean, it definitely was. It was all the way down to 168 a couple minutes ago. It looks like it's trying to hold its ground as the market is too. So hopefully it holds up because, like even yeah, like you pointed up, Tom, Microsoft is like basically doing the same thing. So yeah, stocks are just selling off, and yeah, it's looking pretty rough.
Yeah, it is. Nvidia looks like it's in a very similar setup as well. It's just, I mean, I just can't believe that these stocks are continuing to fall off the way they are. It makes more sense with Apple and Nvidia because they've been up a lot longer. But for some of these growth stocks that we're seeing down like 5 and 10% again, it's like, man, like, is this ever going to stop? But some of these EV companies, even like NIO, like, I know they're only down 1%, but like, look at the drop that happened at market open with them. Like, that's a pretty big candle to the downside. I don't know what caused this selling pressure, but man, oh man, these poor EV companies are getting destroyed along with, Apple and the rest. And as far as like stocks in the green, it seems like the slower movers are like the big players today. I mean, there's a couple up in the green, like Chewy actually turned around for us, Mike. I know that stock has been on our radar lately. I'm glad to see them kind of turn around at open. They were looking pretty bad to the downside, but they really had a nice recovery.
Awesome. All right. I mean, some stocks are popping up, Tom. Like you said, Chewy's looking decent, but then again, it's like, yeah, it's nice to see a decent pop up. Like, let's say, for example, with Chewy, we might see it up 3% today, but it's like, oh, yesterday it was down like 9%, So it's like, it's nice to see the green, but it's also like, dang, like, it's still really low.
Yeah, exactly. Like maybe we'll see a nice continuation today. Like we actually have a lot of room back to the upside. So maybe we'll finally start to see some good movement, but it's just so hard to say right now with the way these stocks have been turning over. Like if we look at Chewy's chart, it looks like a very similar chart to DraftKings. Like it had been rising over the past couple of weeks. And then as these growth stocks have been reporting earnings, they just tumbled off to the downside. It looks like almost like an exact replica of their chart. Even Palantir's chart had a very similar setup as well. Like they had been consolidating and rising and then turned right back over there. It definitely looks like some stocks are like moving in sympathy with each other almost. Like Chewy's kind of following along with the rest of the growth. So man, I really hope to see them turn around, Mike. Like I know Chewy is a good like online business. They're not going to go anywhere in my opinion for the next couple of years. So I think they'll do pretty good. And then we're even seeing stocks like Square or Block just continue to the downside too. Like they're almost like at that $100 support now.
Yep. Alrighty. I'm just doing a quick look. Like I know we already talked about DraftKings for a lot of time, so I'm trying to mix it up for everyone. Yeah, I mean, Tom, I will say, kind of like you said right when we started the stream, for as much selling pressure as we're seeing, like our watch lists are about 50-50. Like we are seeing some stocks in the green, like Zoom. Facebook, like we said, Disney is a little bit in the green, but it's an interesting day because like the market's just like, it's definitely not crashing right now, but at the same time, it's not like it's blasting up either. It's just like so hesitant and uncertain. Of course, the earnings did not help, but also the news with Putin and then also just everything going on with inflation and everything. It's just doesn't help. So I don't know. Are you seeing like any interesting setups or anything you're watching?
Yeah, speaking of Putin, like let's go take a look at those oil markets. And I will say oil has been kind of falling off the past couple of days. It looks like crude oil, it almost triple topped up here at $95. We actually had a pretty nice bounce, like right at 95 on the futures here, and it ended up taking a pretty big tumble down. It was kind of gapping down again this morning, but it looks like here at market open, oil is getting a bit of an uptick back to the upside. But overall, I mean, it's been kind of coming down this week. I know that even yesterday we saw more tensions with Russia as there was like reported shelling of cities and stuff like that even, or I should say shelling of one specific city. But in the end, though, a lot of people might have expected that to make oil fly up, but oil ended up just kind of kept selling off into market open today. So kind of interesting to see oil starting to consolidate. If we look at that on the daily chart, like if it starts turning over, it might start selling off in a big way with how we've risen from 63 straight up to 95 over the past few months.
Yeah. Alrighty. Cornish actually said UAL isn't looking too bad. Yeah, Tom, we definitely have to check out UAL. Like, it's been on a really strong uptrend over the past couple of weeks, and it's holding up pretty well.
Yeah, it's holding pretty well. It's at that like $48 support, at least intraday today. So not bad for a day trade, especially if it can break up above like $49. I feel like we could have a pretty safe move up towards 50, but we'll have to see how the day ends up going. But yeah, lots of these reopening plays are doing good. You know, we have UAL in the green. I saw CCL was in the green earlier. Looks like Delta Airlines is in the green, American. So yeah, I mean, lots of these stocks are in the green. I will say though, they are in those type of setups, kind of like what we're seeing with like, you know, maybe like Netflix and a couple other stocks. Well, not Netflix, but a couple stocks that are just like kind of lagging around this morning. You could almost say they're looking kind of like an AMD, just kind of like flat this morning, not really having too much movement. Although it is good to see that support holding up. If we keep bouncing at these supports, I feel like we could have a pretty good move back.
Yeah. And then Keisha mentioned some of the value plays like Walmart and CPB. And yeah, Keisha, great eye there. The value plays are definitely holding up a lot better than just the overall market. And Tom, you beat me to it. You just pulled up Coca-Cola. You know, while the market itself has been very volatile and uncertain, and you could just say hesitant overall, Coca-Cola has been on a non-stop uptrend since, you can say, like the beginning of December, you know? So that's good to see. Value stocks definitely have a lot of money flowing into them, which is always good to see. Yeah, I mean, great eye there. Hopefully the growth stocks can look like this in like a month.
Yeah, I hope so. And you know, a lot of people I think discount these value stocks because they think that, hey, you know, I can't make any money with value stocks. But like whenever you look at it, like if you would have bought Coca-Cola down around their $50 support, like let's just say you even missed it. Like let's just say you got in around $54 up to where we're at now. I mean, that's a nice 15% up, uptrend there. So looking at it, I know these stocks are really slow, but hey, I mean, 15% is better than losing, you know, to 30% on some of these growth stocks. It's always good to diversify and have some different companies in your portfolio. And, you know, with the way growth has been going down and with the way value has been rising, I think a lot of people are starting to realize, hey, it's really good to, you know, diversify and have a multitude of stocks in that portfolio. So just kind of eyeing up Coke here. It's like at all-time, well, not all-time highs, but highs of the past couple of years now as it's breaking out today. It's looking pretty exciting.
Absolutely. Neighbor Jay said, good morning. What do you think on Cisco? Cisco, let's take a look. CSCO. They are looking pretty good, honestly. Like, their earnings were pretty decent. Honestly, I don't follow this company too much. I thought I saw something with them in the headlines, like they were acquiring some company or something. I don't know the exact catalyst, but either way, the stock moved pretty well off their earnings. Like I said, I don't follow them too much, but, you know, they're a slow-moving, relatively safe play.
Yeah, I think so, too. That's pretty crazy. Apparently, they were going to buy Splunk, Mike, I believe it was. Is that SPLK stock? Let's see. Yeah, I think they were going to buy SPLK. At least that's what I've heard. There is some like articles out there about that. So hopefully they end up getting that. But either way, Mike, like Cisco does look pretty good today intraday. I'll tell you, on the 5-minute chart and even on the 1-minute chart here, it's starting to turn back up in a good way. We're almost back above those pre-market highs. And yeah, I mean, like they said, it's not looking bad. This might be a pretty good momentum play later on.
Sounds good. And then we have Arno saying, what about Affirm? Is Affirm a falling knife? Lots of institutional ownership, though. Let's take a look. So Affirm, yeah, Tom, Affirm has been getting smackarooed over the past couple months. This stock was at $176 in November, and now it's at like 36. So that is pretty rough. Let me take a look at their fundamentals really quickly because I'm just curious. So I'm just loading it up on the dashboard really quickly. I mean, gosh, that stock has been getting destroyed. But then again, all other growth companies have been too. Their price to sales ratio is 9. Let's see. I mean,
Again, that quarterly revenue is growing in a pretty good way, just like almost like DraftKings was,
yeah.
Mike. And, again, they just fell back over, even though we saw some decent growth.
Yeah,
Although I will say their liabilities did go up a lot, but
yeah, that's true. That's true. I mean, yeah, I mean, their revenue's growing, but of course, there's a lot more that goes into a stock and a company's performance besides revenue growth. But revenue growth is kind of like, in my opinion, it's like one of the starting metrics to look at. Like you want to obviously see revenue growth over time. I'm very curious on if if a firm's has been like strongly diluting their shares. I don't know. I'd have to look into that more by looking at their some of their financial statements. But I know that even DraftKings was struggling with this a little bit. Their shares were getting diluted, which it happens. But when you're in a growth stage, that's just like a part of the game a lot of times. And once the company becomes more established, then they start to buy the shares back. So I don't know. I don't really know the full story on the firm. I don't follow it as much as I do with a lot of these other stocks. But yeah, I mean, it's been brutal. I will say this. Like, a lot of people look at, let's say, a firm as an example, and they invest into a firm for their growth potential. Like, if you were someone who was looking at a firm, let's say, 4 months ago, and you liked their growth potential then, when the stock was at, I guess you can say, I don't know, like if you like the firm's growth potential when the stock was at $130, you would love its growth potential now that it's at 37. So if you like what the company does and you think that they will grow a lot in the future, by all means, buy the dip. But for me, I just don't follow it as much to know the full story.
yeah, I don't either. And I feel like this one's going to be pretty risky. We're seeing some of the growth stocks kind of hold their ground, and this one just continues to just sell off to the downside. I know that some others might continue and follow down like a firm over the next couple of weeks, but still, I mean, this one has been particularly bad. It fell below that $50 support. We're all the way down to around $35 now. It's not looking good, Mike. And, like whenever we go look at some of those fundamentals, like their gross profit margins and everything like that compared to their net income just does not look the best. Their operating and free cash flow is obviously way in the negative. I know that a lot of growth stocks are like that, but theirs looks particularly bad. And I really think that a firm will do pretty good over the next like 3 to 5 years, but I feel like they have a lot of room a lot of work to obviously get back up to that valuation that they were at, somewhere like in the hundreds there. And I feel like that as time goes on, though, I feel like a firm might do a little bit better. They've been having deals with like Walmart and Amazon and stuff like that. So hopefully, we see a firm keep growing, but I don't know, Mike. It's just, this one's a tough one for me. And personally, I'm not in this one. I don't think it'll be my favorite one for the long term. As far as some of these like financial stocks that have been going down, one that I've really been eyeing up for the longer term is PayPal. But then again, PayPal is just like a firm. They just are getting destroyed as well. They were at $300. Now they're at $100. And this was a company that's been pretty established, and their revenue and stuff hasn't been terrible. So I don't know. It seems like all these financial, like, I don't know what you call these stocks, Mike, like just financial stocks in general are just down here, especially like the lending ones that have to do with like online transactions.
Yep. We have Rick saying, drop this like for the boys. There we go, Rick. Thanks for that. Let's see. I mean, yeah, Vicky mentioned Palantir. Tom, we haven't looked at Palantir too much. How's that one doing today?
Not good. This one, I will say, is looking pretty bad on the daily chart. Like I said before, we broke that $12 support yesterday. Now we're all the way down around to like $11.20, and we're just continuing to sell off. We can see that this stock actually had some pretty good bounces. If you guys were day trading this, it had some awesome confirmations off that $12 resistance, and then we moved right to the downside. So pretty good opportunities there. But man, I mean, it's down a pretty big way. We're down 4%. It broke that support. It had bad earnings moves, kind of like DraftKings. And this is what worries me with DraftKings, Mike. Like, the initial drop doesn't worry me too much. What worries me is if we just continue to see it sell off, kind of like how Palantir is starting to do.
Yeah. Alrighty. Then we have B saying DBX. Let's take a look. DBX.
Diamondback or Dropbox.
Yeah. I mean, it's coming back. They fell a little bit on earnings, but they're basically at break even now.
Yeah, they were all over the place. I'm glad to see that they came back up a little bit. I mean, you can see like at market close there, like whenever they reported, they flew up and then they flew right back down, and we see that happen a lot. And man, and Mike, it looks like this one was one of those theta killers. I mean, boy, oh boy, that IV crush.
Yeah. Oh gosh. Yeah, that's a good point actually.
And then it opened up like fairly flat. Like I'm sure a lot of people got screwed on this one as it opened right around that closing price. But you know, I will say this one looks like it's coming back with some pretty good momentum. Like if it's able to break above the high of day, like around 24.25, I would say this one might be a pretty good candidate for a move back up. And then Mike, another one that got killed with earnings lately that's coming back is Matterport a little bit. They're looking pretty decent.
True that. True that. Vicky said, hit the like, guys. Yeah, if you guys like the stream, it would greatly help us out, and we'd greatly appreciate it. I know the market's been rough lately with all these stocks getting destroyed. Yeah, I mean, yeah, Tom Ford's not looking bad like you have pulled up. I'm just trying to find something that's moving. Everything I look, everything's just bleeding off to the downside. I mean, Teladoc's getting smacked. Baba. Everything. Gosh.
Yeah, it really is. Like, look at Baba here. The China plays are down 5%. Poor Baba. I mean, boy, I mean, we see them have these crazy gap downs in pre-market all the time, and they just continue to kind of turn over here at market open. And they were just sitting at $130 just a couple days ago. Now they're all the way down to 118. Like, man, they gave back some of those gains. But looking at them on the daily, I mean, they were kind of straddling that resistance there. So I guess we could have been careful around $130, but it looks like they do have earnings coming up though, Mike, on February 24th, which is next week. And, you know, we've been seeing some earnings plays go up, some earnings plays down. Like Enphase had a good play to the upside, of course, and then we're seeing lots of other stocks move down. I'm curious to see how Baba does, because I feel like that Baba has been moving down more on the bad China news than they have on Baba's company specific news. So as these earnings come out, I feel like if they report good numbers, especially since we're seeing China out of the headlines lately, it seems like Russia kind of took their place now. Hopefully we see these China plays start to rise.
Yeah. All right, George said Matterport is trying to come back up, but I can imagine $7.50 will be hard to break anytime soon. Yeah, hopefully it pops back up. This is another one that's been struggling a lot lately, but they also reported earnings, so we'll see. I mean, all of these growth stocks are looking really rough, obviously, but, you know, in the same way that the stocks have been getting destroyed, I don't want to say most of them, but the quality growth stocks will rebound back up in a major way, and that's always we're definitely counting down the days for that to happen.
Yeah, and I feel like it's going to be coming sooner rather than later at this point. You know, we've been going through a few quarters now, or a couple quarters now, of just straight downwards movement, especially like with DraftKings and with a lot of the growth. So I feel like that, you know, it's been like 6 months of straight downwards movement. I feel like we're eventually going to see a nice turnaround. And, you know, with the way they're spending on ads and everything, and with the way these other states are legalizing, I feel like DraftKings will do okay. And, you know, there's even the other stocks like Palantir that have been going down, you know, of course. And the good news is, Mike, is that a lot of these stocks are still moving in sympathy. You know, like we're seeing Palantir down today 5%, but the good news is like it's not just Palantir. You know, we're seeing Baba, SoFi, Lucid, Enphase, DraftKings, Roblox, RUN. So we're seeing a lot of the stocks down at the same time, which shows that I feel like they're still moving in sympathy with each other in some type of way, which in my opinion is pretty good, because that means that when they start to rise, they should start rising in sympathy with each other as long as the market stays the same as it is now. So hopefully we see them all rise, because it'll be a nice sympathy move, I think, out of the overall growth market. But yeah, I mean, it's just bad news in the short term, Mike. They just continue to go to the downside. And I do remember some people in Discord yesterday asking about some DraftKings puts. I remember they were saying, hey, I have a couple hundred shares at DraftKings. Do you think it'd be smart for me to maybe grab a put that expires next week? And you know, it seems like that might have been a pretty good hedge today with the way DraftKings open.
Oh, of course. Of course. Yeah, like normally speculating on earnings with options is a bad move to make, but when you use options as insurance, as like they were originally made to be, it can be really good. Like sometimes like you can just like buy shares of the stock and then buy puts as insurance. So, your downside loss is limited. And, if the stock were to blast up on earnings, then, hopefully the stock profits outweigh the loss from the put insurance. So, using stocks and options together is really powerful. You could, of course, do things like covered calls, but you could also do things like protective puts and a wide variety of other spreads. So it's always good to use them together. But yeah, Tom, I think we basically covered all of the movers today. We covered a lot with DraftKings earnings, which is very irritating. But yeah, do you have any other stocks you're watching or anything you think I missed?
Yeah, I don't think we really missed too much here. There's been a lot of news going on and lots of crazy stuff. Maybe we should go check out CNBC one more time just to maybe see if there's been any more news with anything crazy. It looks like something's going on with a new space company with someone who formed Virgin Galactic. More, oh wow, it looks like the treasury yields dip as focus remains on Russia. I wonder how those yields have been. Let's see TNX. Wow, look at TNX actually coming back under 20, Mike. It actually almost looks like it's back on the downtrend here.
Interesting.
At least over the past couple days, not for the next, month or so. But, this is a pretty good drop.
Interesting. Very interesting. Yeah, and I just saw someone in the Discord posted a CNBC link saying how Russia now has over 150,000 troops near Ukraine amid reports of more attacks. I'm reading this live right now. Looks like the Ukrainian government and Russian state-controlled media exchanged fresh accusations of ceasefire violations. What else? Yeah, it said that the U.S. ambassador also estimated that Russia has amassed between 169,000 and 190,000 military personnel near Ukraine, up from 100,000 on January 30th. So that is interesting. What else? Yeah, just not good, Tom. These tensions are not good.
Yeah, it's not, and it's just going to probably keep getting worse, unfortunately, and I hope that it gets better. Yeah, a lot of people have been saying that our media might be, kind of blowing this out of proportion, and I really hope that's the case, but, we can only go with what we're told, so hopefully we see the tensions stop, Mike, and I know that the tensions have been happening for a while now. It's crazy to see how many troops are amassing at that border, because I had seen earlier in the week, numbers of 150,000, kind of like what you said at the beginning, and then now we're seeing stuff like 170,000, and I think you even said, what did you say it was, 160 to 190?
169,000 to 190,000 military personnel near Ukraine.
Yeah, definitely. That's insane. I was seeing reports of 150,000 a few days ago, so it's just insane to see how it just keeps growing and getting larger. So I don't know what to think about that whole situation, Mike, but we can see that it's definitely affected the SPY this week in a pretty bad way. Yesterday, I know there was some reports of shelling on certain villages and stuff, or I should say one village, but you can see the SPY really tumbled with that news. Even the day before, we had the SPY shoot up with as the Fed minutes came out, and the Fed said, hey, we're going to start using our tools to try to combat inflation, and it seemed like the market liked that, and the market kind of took a nice pop. But then the very next day, we just sold off in a major way as we had that Russia shelling news where Ukraine said there was pro-Russian rebels attacking a city and stuff like that, and then Russia said, then our State Department said Russia might be trying to make a false flag, and it just seems like this stuff is just getting crazy, Mike, and it's just not going to stop anytime soon. So looking at the SPY, we're straddling the 436 support here. I will say, if we continue to see bad news like this come out today and we see the SPY fall below 436, I could probably see it continuing to sell off kind of like yesterday and maybe wait for a confirmation, because yesterday that confirmation off of 442 was such a good level to enter for a put.
Yeah. We will see. Just checking to see if we missed any last minute things. Let's see. Bravo said, good morning, guys. If you got a choice and you have cash, would you rather stay during the weekend or not? I sold some Disney DraftKings today, trying to short. I see a sell-off at the close today. Why would I keep my cash in for a 3-day weekend and possible Russia news? It's good to short sell DraftKings, I think. Well, I disagree with that statement. It's here, like, here, if we're going to go back to the valuations, let me pull up the dashboard really quickly. So according to the dashboard, DraftKings market cap is, let's pull it up. Let's see, DraftKings market cap is around $7.3 billion. Like, when DraftKings market cap was, let's say, $30 billion or anything around there, I can understand a short sell, but to me, shorting it when it's at a $7.3 billion market cap, in my opinion, that's a bad decision to make, but, you know, it is what it is. But either way, if I were in the situation you outlined, Bravo, with the cash and holding over the weekend or not, it all depends on your risk tolerance. For me, I'm open to a little bit more risk, so I would have some skin in the game over the weekend. One really, really, really important thing to keep in mind with the Russia tensions and growth stocks falling is that if we look back at the SPY, Tom, over the past 2 or 3 years, the people who made the greatest returns bought during the peak amount of fear, you know? So whether you're looking at any Russian-Ukraine stocks, whether you're looking at growth stocks, whether you're looking at anything, in order to have the highest return, you have to buy during the peak fear. Like, when everything's all sunshine and rainbows, you're going to have to pay a premium for that. So for that reason, I feel like if you have companies that you like for the long term and they're at a good level, I feel like even if you might not catch the bottom, it is good to have some skin in the game, as you can say. And Tom, you beat me to it with the Warren Buffett quote.
Yeah, be fearful when others are greedy and be greedy when others are fearful. I cannot say, guys, this is probably one of the biggest pieces of advice, you know, anyone in the market could take. Kind of like what Bravo said. Like, he's like, hey, DraftKings would be good to short sell right now. You know, I would have to say that DraftKings, if you would have said this while DraftKings was up around 50 or 60 or something like that, you know, I might have agreed. But, you know, we're shorting it now after the stock fell from 74 down to $17 or $18. Like, that is a big drop out of a stock. And, you know, some might think, hey, you know, of course the company they're probably going to go bankrupt now. But in reality, you know, growth stocks have had moves like this a lot. You know, Tesla had moves like this in the beginning, and we've seen plenty of other stocks over the past 5 to 10 years that were kind of starting out have similar moves to this. You know, just keep in mind, a lot of traders also came into the market at a very good time. You know, they came in right after COVID, and we had that huge recovery out of the S&P 500, and we generally don't see the S&P rise like we did. And I think that really, it got traders a little bit kind of spoiled in the market. You know, like, they saw 2 years of just straight upwards movement, and now we're seeing stuff start to go down, and I think people are just freaking out a little bit too much. The main thing is just be fearful when others are greedy, be greedy when others are fearful. You know, I remember, Mike, with the COVID drop, I made some plays like on Intel and a few stocks like that during that drop, and I'll tell you, that was one of the best times I ever got into the market. I also got in on that 1,000 SMA during the China drop, and that was a pretty good recovery there. You know, did I go all in, and did I, you know, spend my whole account like whenever the stocks dropped right there? No. But did I pick up some good companies at maybe a good valuation? Yes. So I think that's the main thing right now. Are these companies at better valuations than they were like 2 years ago? And I think they definitely are, especially like when we look at like DraftKings, Zoom, and stocks like that. Like, of course, they're at like huge discounted levels right now. And we just have to keep in mind that, like, you know, like, a lot of people are out here really dissing a lot of these companies like DraftKings, Zoom, and stocks like that. And they probably are thinking in their head like, hey, these companies aren't going to be around in a few years. But in reality, it's not like these companies are just going to go bankrupt tomorrow or anything like that.
Yeah, exactly. So yeah, we appreciate you a lot, Bravo, and I definitely understand where you're coming from, though. But yeah, thanks for all the comments and I guess you can say input. We really appreciate that. B said Fastly is one I'm buying for 5 to 10 years. Let's take a look at Fastly. I've not been like watching this one too much on a fundamental basis, but of course I've been watching the recent stock movement, and yeah, it's been rough with all the other growth companies. So it sounds like you're in it for the long term, as you suggested, and I will say like their max weekly chart is still good as of right now, but it's definitely looking worse by the day, and I guess you can make that statement for all growth stocks, though.
Yeah, you can. And I was really hoping to see Fastly move back up, but just like we've been seeing, those earnings have been turning stocks around to the downside. So definitely not good to see them drop, especially below $20. That was a pretty big psychological level and just a pretty big support from the past. But looking at Fastly, we'll just have to wait on it, Mike. It looks like it's just following the rest of the growth sector back down. And I've been honestly eyeing up Fastly over the past couple of years, but it's just another one of those stocks where it's like, hey, I'm just waiting to buy it at the right time.
Yep. Then we have Vicky saying, this is the best ever time to buy, as everything is in a bargain zone. Not sale, bargain. So, yeah, I mean, I agree with you with certain stocks. I still think some companies are trading at some pretty hefty valuations, but I think a lot of these growth stocks have been beaten down excessively, and I feel like the risk reward for many setups is extremely, extremely good. And even though the market is irrational sometimes, I'm just excited to see what a lot of these companies look like in, let's say, 5 or 10 years.
Yeah, exactly. Because while we're saying the market is irrational, the good news is that once we start seeing good news come out, the market might be irrational to the upside. So that's the good thing about it. Hopefully we see those sentiments start to change, Mike. And it looks like the SPY is like starting to turn back over here, which is not good to see. Definitely not good to see them turning back down. And yeah, I know that Bravo says he's not selling out of DraftKings, just shorting it. It's on his mail list. And yeah, I know. I feel you, Bravo. Definitely thank you for the comments. Whenever I was saying, be fearful when others are greedy, I mainly mean that more towards the other viewers who are watching, because I just didn't want them to think, hey, now's the time to go short DraftKings shares or something like that. That's the only reason I said it that way.
Yeah. Bravo said, I argue this is the best ever time to short the market today. People fearful and you can short, then buy back. It's a lot of fun. Yeah, shorting can definitely be a lot of fun, but I feel like even like we just showed with Warren Buffett's quote, it's like, yeah, like day trade shorting can be fun and it can be profitable for a little bit, but it's like, you could pick almost any stock right now. Like I know we watch DraftKings a lot, but let's say you pick, let's say you pick Zoom, right? Actually Facebook, Tom, you actually just had that one pulled up. Perfect example. Let's say we look at Facebook. They are, whether you like Facebook or not, they just print money every single quarter. Their stock went from 384 down to 207 in a couple months. So it's like, what are you going to do? Like short it now at 207 and buy it back at 205? It's like, yeah, you can, but eventually the stock's going to blast back up. So it's like, to me, like I feel like, yes, it might work in the short term, but I feel like the concept of shorting stocks when, especially like with Facebook's example, is when it just fell from 384 down to 207, I feel like it's not a good process to have for the long term. And that's just my opinion. Like, yeah, sure, Facebook and DraftKings and Zoom and Chewy and everything else can continue falling. Anything's possible, but it's like, I feel like shorting stocks when they already had their giant drops is not a good idea.
Yeah, me too. And that's the main thing I was trying to get across, is that you can look at these stocks like Facebook that have great fundamentals, and then they just continue to just take these big drops like this, and they're going a little bit lower, and you might be able to get into some nice day trades. But I feel like for long-term opportunities, maybe like shorting puts down here, maybe getting shares, stuff like that, I just think is going to be a little bit more, it's going to be safer. Like obviously you take some risk when you're shorting these stocks, especially at lower levels like this. So, I'm sure Bravo, it's going to be a little bit risky to short some of these, and especially like some of the growth, but hopefully it works out for you. Definitely keep letting us know. It's very interesting to see what's on the radar here for you, and it's very interesting to see what everybody's doing in the chat. So really good info there, and hopefully I don't want to say hopefully DraftKings goes down, but hopefully it works out for you and for your portfolio, especially if you have some longer term positions. If you have like some long-term positions, shorting in the short term might not be a bad way to go. Indeed.
All right, Tom. Well, I think we're going to wrap up the stream now. Before we close it out, I just want to personally thank everyone for joining. So thank you so much, J-Trade, Keisha, Trading Lifestyle, Michael, Easy Rider Danger, Jamie, Vicky, George, Hunter, Sal, Mike, Mason, Sean, Keisha, Neighbor Jay, Arno, Rick, B Trading, Raymond, V, Bravo, and Randy, and I think that is everyone. Thank you so much for joining, Head. Thank you guys so much for joining. The market kind of sucks today, to be honest. I know Keisha was mentioning EVGO. I mean, we had a lot of comments today, Keisha. We definitely covered yours a couple times, but EVGO, we don't really know much about it, and the stock's honestly not really moving right now.
Yeah, it's not. It's kind of consolidating right there around $10 to $11. It's had a lot of resistance that we're sitting at right here. We can see on like the 1 hour chart, it's had like 3 or 4 bounces where we're at. I will say if it breaks this to the upside, it might make for a good day trade, but personally, this stock is just so volatile. It's going to be a tough one to play.
Yep. All right. Well, again, thank you guys so much for joining. Thanks, Bravo, for the great input. And again, thank you guys so much for joining. Don't forget the market will be closed on Monday. But other than that, thank you guys so much for joining, and have a great rest of your day.